In the past 24 hours, the odds that a government shutdown will happen this Saturday popped from 10% to 76%. The government's trying to pass a funding bill right now, but after a second U.S. citizen was killed by ICE this weekend in Minneapolis, Senate Democrats are threatened to shut down the U.S. government if DHS and ICE funding is included in that bill. The last time the government shut down, though, the stock market actually rose by 3% during that time. The peak was actually at 4%, and the worst point was only at 1.5%. So the last time that the government shut down, the market didn't really care too much. But notice that within this box, there was a lot of chop and just a lot of downside action that came into play during that uptrend. So we got to be careful. And one of the other big things is, Mike, is that whenever the shutdown finally ended, I think a lot of traders were really looking for that all-time high to push there. Instead, though, the market sold off.
Exactly. A lot of people got trapped during the last time this happened, and this is something to look out for heading into this week, especially considering that we also have the tariff trade war kind of heating back up again. This week, the stock market will instantly start off with more volatility because Trump threatened to impose 100% tariffs on Canada if they make a deal with China. Basically, on January 16th, about 9 days ago, Canada and China announced a new strategic partnership to remove trade barriers and lower tariffs. Essentially, China's going to cut tariffs on some Canadian agricultural products, while Canada will increase the quotas for imports of Chinese EVs, applying the most favored nation tariff rate of 6.1%. Initially, Trump actually praised this deal, but now he kind of has different feelings about it. He said the last thing the world needs is to have China take over Canada, and it's not going to happen. The issue is that Canada has not been very cooperative while negotiating with Trump at all. So considering Trump just threatened new 100% tariffs on them, we need to keep our eyes out for this move because as we've seen with all other tariff threats, they can certainly shake up markets quickly.
Yeah, and Trump is having no shortage of the crazy rhetoric here either, saying that China will eat Canada alive and completely devour it. So, we're seeing this get, this is definitely on the forefront of Trump's plate and agenda right now. So it'll definitely be something that we watch out for as the week goes on. But Mike, as the week goes on, there's actually some crazy earnings reporting this week. Some of the biggest stocks in the S&P will report. Starting off on Wednesday, we have Microsoft, Meta, and Tesla reporting in after hours, and then in after hours on Thursday, Apple will be reporting as well. And these stocks, like I said, are some of the biggest in the S&P. If we look at the top 10 companies in the S&P 500 by weighting, 4 of them will be reporting this week. Apple, Microsoft, Meta, and Tesla. And there's no shortage of popularity either. Tesla has been very hot lately. A lot of trading has been going on there. And we can also see that this is the second largest earnings week of the season. Next week will technically be larger. But again, whenever we look at the weightings, these are some of the biggest companies in the S&P reporting out there.
And you know what that means. More big moves for the S&P 500. I think investors are going to keep a really close eye to hear what these big tech stocks say related to their AI capital expenditures, because that'll be a big gauge to see how healthy this AI boom is, as well as to get signals to see how consumers are doing as well. But let's also not forget about the Fed rate decision this week as well. On Wednesday at 2 p.m. Eastern Time, that is when the next rate decision will be, and then the big man, Jerome Powell, will speak 30 minutes after. This is going to be the main macro catalyst of the week. Markets are going to be focused on the tone of if/when the next rate cut will come. Right now, there's a 99% chance that the Fed is going to hold rates steady.
Yeah, that is a huge decision coming up here. Now, like you said, the main thing is really looking at the future here. As of right now, there's that 99% chance being priced in for the Fed's maintaining rates at this meeting, but there is still a lot of stuff up in the air about the future. One of the biggest things that's up in the air about the future right now is who's going to be the next Fed chair, right? Bessent actually came out and said that this could be coming up as soon as this week. So I found this extremely interesting. He said that we We have 4 fantastic candidates. It'll be up to the president, of course. And as of right now, Rick Reeder is leading on Kalshi at 52%. Kevin Warsh was on top, but recently they kind of flip-flopped positions there. But either way, it'll be interesting to see if Powell gets asked about this and if we do start to see more information about the next Fed chair truly coming out. I feel like that we keep hearing about this, but nothing ever happens.
Yeah, and right now the next rate cut is set to happen on June 17th, so we shall see, but this will be a big deal for the markets over these next few years, and it's going to be exciting to see how it ends up settling. But Tom, when we look closer at the market right now, we're close to all-time highs, but the market is still pretty shaky. When we look at the charts, what are you seeing, and what big levels are on your radar heading into this week?
So we've talked about this a lot over the past couple trading weeks where the SPY had recently been following a major uptrend. And what we saw recently is the SPY gap down below that trend. Now, last week, the SPY did recover back up. And you can see that right where the SPY got to is that trend line again. And it also filled the gap up to around 691.30. From that gap down. So that's going to be a big level to watch for. I've had this marked on the chart for a while as resistance, and I'm going to keep watching it, especially with the double top rejection happening there on Thursday and Friday. So if we can really see the SPY rip through 691.30, then I will be watching for an uptrend to continue. And at that point, the all-time high closer to 697.30 will be back in play very quickly. But what I am worried about, though, is a possible rejection off of this resistance. There's a lot going on globally. Of course, there's a lot of volatility starting to hit the market as well. And the SPY is starting to straddle big support around 687.30 to 687.50. We can see that zone marked out here in red where the arrow is pointing. And if I do see that start to give out this week, that's where I'm going to look more of the SPY to the downside. Finishing off last week, the SPY kind of traded in a bit of a range. We can see that range right here on the chart. It really failed to break through resistance. At the same time, support held up.
Let's keep a close eye on this area. There's also news going on where Trump said there's a U.S. armada heading closer towards Iran, and he said that he's watching it very closely. The situation seems really bad over there, and this is just like another geopolitical risk/event playing out. But either way, great stuff, Tom. We will keep a close eye on these levels. But there's also a lot going on with the market as a whole right now in Asia specifically. Markets are weaker than usual heading into this week, because the Japanese yen is and has been crashing. So basically the Fed did what's called a rate check, where they call up large currency dealers asking for quotes on the dollar-yen pair. This would be the first step towards the U.S. intervening in markets, where the U.S. would essentially buy Japanese yen and sell dollars. When this news came out, the dollar crashed off of this. This is like there's nothing like specifically tradable from this right now, but we wanted to point this out so everyone could be aware of it as this situation is developing. The main thing to know is that this just adds more pressure to like the global markets.
It really does, right? And what have we been seeing move up a lot lately is these safe haven assets like gold and silver. And even on Friday, we saw gold and silver still popping here. Like GLD is hitting 459, almost up to 460 at this point. SLV hit 94.42. And if we actually look at silver itself, silver is actually blasted through $100 on Friday. And on Shanghai markets, it's even traded for as high as $112 an ounce, with premiums to U.S. prices hitting $9+ an ounce. Looking at USAR to the upside, USA Rare Earths has been on fire here, and there was actually some great news that came out with this stock on Friday, helping it rise as much as it did. The Trump admin's actually taking a 10% stake in USAR. The U.S. is planning to put $1.6 billion into this company and providing $1.3 billion of senior secured debt through a Commerce Department finance facility tied to the CHIPS Act. The package and a separate $1 billion private financing are expected to be announced on Monday. I would not be surprised if USAR started to gap up again from this news. So if we wake up early Monday morning or tomorrow morning and we start to see USAR gapping above the high of day from Friday around 25.30, I will be looking at upside opportunities here. These rare earth companies have went crazy in the past, especially on Trump news. We can see scenarios where they will gap up and then continue for multiple weeks in a row. And I am watching for some of these recent highs to possibly come back into play. I'm not saying it's going to get as high as 44 again, but at the same time, there's some really good momentum and good news here.
Let's also remember what happened with MP Materials, ticker symbol MP, back in July. They had to deal with the U.S. government, and the stock ended up running for quite a while after that. So,
first thing to note is that the futures in the overnight were down decently initially, and a lot of this was on the back of another threat towards Canada from the president about adding 100% tariffs if they went ahead with a trade deal with China. Ultimately, nothing's going to come of it. Markets realize that, and they've really floated back and are now trading around the flat line on the day. So just taking a quick check in on the S&P futures, you can see we opened sharply lower last night at 6 p.m. Eastern time when the futures opened. And ultimately, again, we could see the markets rallying up, going sideways, moving up, then a little bit of a dump in the early morning East Coast time before we pushed back up. And based on where we closed last week, we're essentially flat to positive. So the markets, again, opening the day essentially around the flat line, nothing major earth-shattering. However, this week, we have the Federal Reserve announcement on Wednesday afternoon, Jerome Powell's press conference. I think that's going to keep everyone on their toes because of what's been going on with the president attacking the Federal Reserve and their independence, right? So again, does Powell say anything in that press conference to allude to something bigger? Is he going to stay on the Federal Reserve as just a president once he's no longer the chairman? In addition, folks, we have Meta, Microsoft, Tesla, and Apple earnings this week that will give added volatility to the tech sector. It should be a wild one. All right, let's get into the charts here and take a look, flipping over to the S&P 500. And don't worry, we are going to talk about silver and gold. Holy cow, what a move. But initially, let's just cover the S&P. We are still below this key trend line. Remember, we have the big parallel. So the big parallel here, folks, which has marked every major pivot low in the market and every major pivot high thus far. In other words, we trust the parallel until it proves otherwise, right? And as of now, it is proving to be accurate and a resistance level up there. That limits the amount of upside in this market unless we were to break through. Next up, we look at this, and what we have is this beautiful up-sloping or ascending trend line that goes back to the April lows, the Liberation Tariff sell-off lows. And what we can see here is it crosses perfectly through this low, this low, this low, and we have broken. Now, it's an unconfirmed breakdown per the confirmation signal, but nonetheless, folks, we have to remain on watch, and this does shade slightly to the negative bias as we are both below the white trend line and the yellow trend line. The NASDAQ did confirm to the downside. It's doing a classic retrace to the scene of the crime, so close below, confirmation candle, retrace. This is going to be interesting because essentially we're coming into earnings on these mega cap tech, and this would indicate that they may not perform quite as well as markets and investors may want, the mere fact that we are still below this white trend line. So let's watch and see what happens when they report later this week. Again, three of them, everyone but Apple reports on Wednesday after the close, and Thursday after the close is Apple. Now, there's bigger concerns here. When we talk about what's going on in silver, what's going on in gold, is it a momentum trade at this point? The answer is yes, but it basically hints and shows underlying worries, right? I mean, it's not arbitrary that gold and silver are performing so well. What does it tell us? It tells us there's a fundamental disbelief or unnerving at the U.S. financial state. And this goes to the tariffs that are just getting levied willy-nilly, potentially. Even if they are brought back in as threats, it makes people uneasy. We talked about last week how other countries don't want to buy U.S. debt, how other countries are dumping U.S. dollars. It's essentially de-dollarization, but starting to be sped up. And for those of us here, that's not a good thing. It's going to ultimately weaken our buying power. Now, listen, can manufacturing do well? Maybe. Potentially, but ultimately it means that your and my dollars, anything we buy abroad is going to cost us more, potentially inflationary. And we see that inflation already: copper, aluminum, nickel, silver. I mean, all of these industrial metals having surged massively to the upside, it will put pressure on inflation. Now, if we go back to the charts here, the thing we have to look at, keep an eye on the US dollar. This is very concerning, this drop last week. The dollar falling off a cliff, down again today. It is still holding the underbelly of this longer term zone of support. But if this breaks and we're coming down to start to test it again, this would be that nail in the coffin on the US dollar. Now, keep in mind, a nail in the coffin on the US dollar doesn't mean it all of a sudden crashes. It just means it's going to continue to decline and slowly not be the reserve currency of the world anymore. You'll see more and more countries dumping US dollars because it's not the reserve currency. Think about it like this. It's a snowball that is very small right now, but it's starting to roll down a mountain. And as it rolls down, it picks up size and speed. And that's what I'm concerned about overall. And you can see that in other currencies, right? If we flip over to the euro, I mean, look at this. The euro has broken out against the dollar. I mean, this is a classic breakout chart pattern, and it's looking like it wants to continue up. Look at the Canadian US dollar, right? Or the Canadian dollar here. The biggest fear I have about this, and this tells us, listen, if you're in Canada, your buying power probably is going to increase, because look at this pattern. This is an amazing inverse head and shoulder pattern on the Canadian dollar versus the US dollar, with a neckline that is nearing a breakout to the upside. And so all of these things are pointing to continued weakness. Even the British pound. Look at this. Look at this chart. Major breakout. Notice how here it retraced right in this area, and it held support. Path of least resistance is to the upside. All right. So all of this, everyone essentially but the yen. The yen continues to remain very weak compared to the US dollar. And again, the old adage is look at the amount of debt to GDP in Japan, and you can understand why that currency would likely remain weak versus the US, versus the other currencies. And again, a lot of us out there that are watching don't pay a lot of attention to currencies. I generally like to keep an eye on them because of situations like this. It's basically a breadcrumb to something bigger that is going to happen. And when you have a government that is essentially spending more money than ever, all right, this is just a train that at this point I fear cannot be stopped before it ultimately creates a massive collapse economically. Now, listen, timing wise, I'm going to be the first to tell you, timing for me is so hard. I see things ahead of time, which is one of my gifts. I can kind of connect the dots, but that also means like, okay, well, is it going to happen in a year? Is it 2 years? Is it 5 years? Is it 10 years? I honestly don't know. But I think we can all see the writing on the wall here of what the ultimate outcome is. And at the root, we can see why gold and silver are making these moves right in front of us because of this unease, because people are starting to understand the ultimate outcome for the US dollar. Scary stuff, guys, at least in my opinion. All right, let's get into a few things here. We should touch on silver. Silver up again. It actually broke $110 per ounce, folks. Incredible. Now, at this point, I've got nothing on this, right? It is such a momentum trade, so vertical. Look at the monthly chart, guys. This is the monthly chart. Silver has never had 9 up months in a row, and it will have 9 up months this month, unless we sold off back to $70. Actually, we'd have to go back to $70 per ounce in the last couple days of the month, which isn't, I mean, listen, even I don't think that's going to happen, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9 up months in a row. Now, when you're trying to chart this, number one, it's a momentum factor. When it goes to momentum, it's very hard to chart because it becomes more of a greed factor than anything else. Holding gold is essentially an insurance policy. That's what it is. That's what it is. And listen, we have seen promises, we have seen every which way, and yet spending continues at breakneck speed. And my concern is that if at some point, by the way, the market will force market conditions, and we saw this in a lot of the countries in Europe, I think in around 2013 or so, where the markets forced them into austerity. And you know what's going to happen here if that happens? We're going to have a massive recession. It's going to make the Great Recession look like a minor recession, like a small recession, maybe even a depression. So listen, again, timing is the problem here. You just don't know when the merry-go-round, the music stops, but at some point it will. You got to be ready for it, folks. Got to be ready for it. All right, let's go on to a few other things here. I want to flip back a couple charts I'm keeping an eye on. Newmont Mining here, folks. Newmont Mining is vertical today. Great move up on this one. Keep an eye on this trend line here. This is a trend line I am looking to potentially short. If we bring this up here, we can essentially see that if we bring this down right to these lows, we're essentially right into this area here, right? So there should be, you can see this uptrend break, and now we've come back into that level. We are gapping up just a little bit, but again, a lot of resistance around this 128 to 130 level on Newmont Mining. GDX, same sort of trend line. We're going to be gapping right into the trend line on GDX. This is a level I will be monitoring very closely today on the charts myself. All right, so lots going on in the metals. Honestly, as we're waiting for earnings later this week, this is really where my focus is. On the metals, they are going nuts right now. Absolutely insane. Platinum, palladium, copper's kind of stalled out here just a little bit. Again, copper can be an indicator potentially that there's something, a slowing of the economy starting, versus silver and gold is still a momentum trade, but also a safe haven trade there. All right, so let's go on to a couple of these other ones. I'm going to flip back to some stocks here, just going over a few stocks going into earnings. Meta has bounced off a major trend line. Meta reports after the bell on Wednesday, but essentially we have a good bounce here on the chart. Again, if we did rally on earnings, the major resistance would be gap fill at $750. Again, I don't know if it'll go there, but that would just be a level where I would look to fade off of that point. And then if we did see a big sell-off, look at how many times we've hit this trend line. It's very likely we could see a breakdown of that trend line. Microsoft on Wednesday reports. Microsoft's also seen a bounce in the last couple days. Notice it came right off technical support. I still think even if Microsoft bounces on earnings, I still think it's going lower because, again, look at the size of that gap. Huge gap right in here. And one of the old adages that I was taught by traders in my early years is generally you look at gaps and assume they will be filled. Now, you don't know when, but essentially as they get closer to the gap, it works like a magnet, drawing it closer and closer until it fills, right? And that's the way I look at these gaps. And so at some point, especially if we break current support on Microsoft, that magnet effect pulling it to that gap fill is likely to take hold. That would be a buyable level, though, per technical analysis. All right. And then Tesla, we won't go over Apple today. I can go over Apple tomorrow because that's on Thursday. But Tesla continues to trade in an uptrend parallel channel. We tried to break here, never confirmed, got back up. Which way does it go on earnings? Again, upside resistance would be above 500 here. If we break here, you likely would head down to the 375, 365 area right here. Maybe a little bit of support around 385. But suffice it to say, somewhere in this vicinity here, this would be your kind of zone of support if it breaks down where you would expect a technical bounce. And then likewise up here would be that big resistance level. All right, quickly touching on oil, not much doing here. As wild as other commodities are. And by the way, natural gas has been insane, right? Gold, silver has been insane. I mean, everything's been insane except slow and steady crude oil. Now, I like crude oil here. I think it's one that's going to see money flow. Institutional money doesn't pull itself out of the market. It rotates. And so ultimately at certain points, the institutional money is going to exit some of the metals and going to look for something that hasn't run yet. And that might be the name of oil here. But you can see it did break out. It retraced. Now it's pushing up. A little bit of a down day today, but I still think ultimately this likely heads up, not because we don't have a lot of supply. And this is what a lot of people misunderstand about trading in the near term. All right, supply matters over the longer term. It eventually will, if we have an oversupply, eventually it draws price back down.